Councillor North, John Adams, in the interest of people. Hello, John.
Hello, sir.
Good to see you again, just after Christmas.
Yes.
And negative interest rates are all steam ahead.
Indeed, Martin. So we have been talking about for several months about the $10,000 cash transaction ban, which is still in front of the Senate. Part of our argument against the cash ban has been this linkage with negative interest rates. The IMF technical working papers, a whole bunch of other world central bank papers talk about the need to eliminate cash to make negative interest rates work. This linkage has been drawn out, and we've been called conspiracy theorists. The AFR, Mr. Patrick, and others have said that all of this is just boxing its shadows. In the recent public hearings, the officials from the Reserve Bank said that that the issue on negative interest rates are completely unrelated to the cash ban. And yet now we have, I've discovered some new evidence that the big four banks in Australia are getting ready for negative interest rates. And it just adds, I think, further weight to the concerns that we have about, well, if negative interest rates does come into Australia, what does it mean for cash? What does it mean for the ability to protect your wealth and to get out of the banking system? And if you want to withdraw cash, can you use that cash in a legal way to basically live the life you wish to live?
It's worth reflecting, a lot of the banks have very old banking systems and old technology, so they can't just sort of flick a switch, right? They've had to invest quite big to be able to actually put the capabilities in place to deal with negative interest rates, and that's how we know about some of this stuff.
Yes. Well, some of the banks have, some of the banks have not. So we'll get into that in a second. Yep. But before we get into the banks, and and this evidence has just been given to the House of Reps during the month of November. So it's something that I've come across. But I thought it would just be worthwhile to just go back to the first principle of the RBA governor. So going back to his speech from the 26th of November. Where he talked about unconventional monetary policy. So on the issue of negative interest rates, so let's just put the quote up. Second observation is that negative interest rates in Australia are extraordinarily unlikely. We are not in the same situation that has been faced in Europe and Japan. Our growth prospects are stronger. Our banking system is in much better shape. Our demographic profile is better. And we have not had a period of deflation. So we are in a much stronger position. Now, what we know about the RBA's forecasting, as well as Treasury's forecasting, it has been horrendous. Whether it comes to growth, whether it comes to forecasting sort of things like investment consumption, the RBA continues to say, it said it throughout 2019 as well as 2018, we anticipated X, but Y was the reality. So I have no confidence in what the RBA governor has said in terms of it's a possibility. Because extraordinary unlikely doesn't mean impossible. So it could be possible, but we just don't think so because we are in a completely different economic profile to everyone else. And yet in the Q&A, quote, but if the unemployment rate was rising materially and inflation was moving away from target, then all options would need to be on the table. So that obviously means that if push comes to shove, negative interest rates are basically going to be here in one form or another. So that's the backdrop. To understanding, well, where could public policy go in 2020 or 2021? But the key thing to uncover in today's episode is that the House, so while we've been focused on the Senate and the Senate inquiry into the cash ban, the House of Representatives Economic Committee has been doing an inquiry into the big four banks as well as other parts of the financial system. And on the 8th and 15th of November, the House Committee cross-examined the CEOs of the big four banks, and the chairman of the committee, Tim Wilson, the member for Goldstein, he asked point blank, "Are you preparing for negative interest rates?" And the answer from all big four banks is yes. So that's the big key revelation of today. Now, certain different answers were given by different CEOs about what their bank is up to. The first quote comes from the CEO of Westpac. So the 8th of November 2019, quote, "We have been looking at that as in negative interest rates, and it certainly raises a bunch of new challenges. We're still working through the systems question. It depends a bit on exactly what that means. Even overseas, where we've had notionally negative interest rates for a long time, we haven't actually seen customer rates or formal deposit rates go negative. We think it's pretty unlikely. Certainly, we're preparing for that possibility. So the key question for the audience to understand is that the IT systems were originally designed so that interest rates would be positive. And from an IT perspective, the software has to be reconfigured to allow for negative interest rates to occur. So that's what this whole question's about. And obviously they're saying, well, we don't think it's going to happen, but we're looking into whether there is a systems question. Now, before we get into some of the other quotes, what I will say at this point is that I am aware that with the next bank we're going to quote, CBA did a significant systems upgrade in around the 2014 to 2016 period in the institutional arm of its bank, because it was dealing with Japanese and European securities that had a negative interest rate. So there's already been some work done at CBA to allow for trading of those types of securities. But the retail banking arm, as in our viewers and their bank accounts, there are some still big system challenges because the IT cannot handle negative interest rates. So the quote here with the Westpac CEO, where he says that we haven't actually seen customer rates or formal depositor rates go negative. Well, that statement is false, because we know that in at least one bank in Germany, in Bavaria, the rates have gone negative for all customers starting at €1. So I mean, so I think it's fair to say that that bank is quite isolated in terms of mum and dad retail deposits. But if the economy continues to slow in 2020, we could see deeper negative rates among commercial banks across Europe. To a greater extent compared to what we have today.
Of course, an IT system is not a single system, right? Most banks will have multiple systems of different vintages, some more modern, some older. Some actually are so old that some of the core code probably nobody understands. So these are quite interesting and important risks, and it's not just a simple of simply flicking a switch. There'll have to be some significant coding probably done in some systems. So different banks will be in different states of dress or undress on this.
Yes. So in terms of the next quote, we have the CEO of Commonwealth Bank, CBA. So this is the quote. Yes, we are doing that work to determine if there are any limitations with a number of our systems from being able to accept negative rates. We would say we think it's extremely unlikely. I think that's consistent with the governor of the Reserve Bank, but we thought it would be prudent to ensure that if those extremely unlikely circumstances ever did eventuate, we need to understand what the impacts of that change would be. My current understanding is that many of the systems would not have a problem, but we have not completed the analysis. So this sort of message is sort of consistent with some of the things I've been hearing on the grapevine, that the CBA systems are pretty much good to go. With negative interest rates, even for retail customers. So CBA is in a reasonably good shape, but as they said, they're still doing that work. Mm-hmm. So these were the testimonies of Westpac and CBA from the 8th of November. Now, on the 15th of November, the following Friday, ANZ and NAB testified. So let's actually go to the next bank, which is the CEO of NAB. We've done high-level analysis, which is showing that we have many systems that cannot handle negative interest rates. There's just no scope for it. Generally speaking, the idea of negative interest rates was never contemplated when some of our core systems were developed. The answer to your question is we've done some high-level analysis of it, but we are not going through trying to build for it either at this stage. So that's quite extraordinary to say that we can't handle this issue, although the key question that comes from this is, well, I'm assuming that their institutional arm is trading in European and Japanese securities. So I would think that maybe they're doing something in this area, or maybe not. Who knows? But the retail arm, definitely NAB is saying, well, we can't handle this. But it's quite extraordinary to say, well, we're not putting any investment to resolve this issue, because one of the things that people have to understand is that. And it depends on the scope of the work, but it could take months, if not a year, to resolve the software issues and yet we could have, a policy environment where interest rates start to go down further. I mean, we're at 0.75%. We could go to 0.5% in February. We could be at 0.25% in by June, and we could start QE in the second half of the year. Well, how much more, how much more runway do we have before we actually go, legitimately negative? Question mark.
Mostly around the world, the negative interest rates are between the central bank and the banks themselves, right? So they're basically being charged a premium if they're not lending.
Yes.
So it's basically an arm twist to try and get banks to lend more.
Yes.
It's not universally translating into retail deposit land yet, although, as you said, there are a few examples where it's starting to now. So there may be a little bit of wriggle room, but I agree with you. If I were the CEO of NAB in this particular environment, I would be taking this much more seriously than he appears to be.
Yes. The key point I'll just make on that is that so this issue of the bank in Bavaria, I mean, they are charging household deposits, but we have seen across Germany that there is an aggressive willingness to charge negative interest rates on corporate deposits.
Yep.
So but the corporate deposits are still part of quote unquote retail banking. So whether they're going to charge the larger than town small business or individual mum and dad depositors, NAB's got a really big issue according to their testimony. They shouldn't allow sort of the time frame to resolve this problem to get too narrow. Otherwise, there's going to be a big rush like in 1999 around Y2K.
Yep.
Now, and just to go to the last CEO, so we have Shane Elliott, CEO of ANZ. Banks have complex systems, so it's not quite as simple as it may otherwise sound. We've done some initial testing in both New Zealand and Australia to assure ourselves that if we ended up having to offer negative interest rates on deposits, or if some of the bonds that we owned were negative yielding, our systems could cope. That work is ongoing. We have a high degree of confidence, but not a perfect degree of confidence. I would imagine, based on my experience and looking at this, that we probably will have to make some changes to our systems. So obviously, so this is the final CEO basically saying we are doing testing, we are making sure that we can do these things. They think we can handle this situation, but it's not perfect, and there still needs to do more upgrading. So Martin, now that we've gone through the various quotes of the CEOs of the banks, it's now time to sort of reflect about, well, what is the implications of this? One of the things that jumps out to me is that anyone who thinks that, again, we are involved in conspiracy, there's no conspiracy. The banks are now openly saying we need to get ready for this from an IT system, from all sorts of other perspectives as well. So in relation to the cash ban, I think that this is actually important information that the senators on the committee need to actually understand about how does negative interest rates link up with this with a cash issue, because the RBA said this is far-fetched. These are two separate arguments, but no, look, they are pretty much the same sort of argument. And I'm not sure if the senators are fully aware of this House testimony, and so I'll be doing some things behind the scenes in January to make sure that the senators looking at the cash issue are aware that the banks have actually testified that they are getting ready for negative interest rates. So therefore, even if it's extraordinarily unlikely, it will come down to a question of freedom about, if you're trapped in the banks by being charged a negative interest rate, can you escape from the banks and still do business? Can you live a life outside of the banks? And if you can't, is that fair or is that corrupt? So I think that's a really big point to make in terms of that. In terms of if you and look, I don't want to bash on one bank, but if you are a customer of NAB, the fact that NAB is the one of the four that is openly saying we can't cope. Everyone else is saying we're testing, we're coping, we have confidence, but one bank says we don't have confidence, and we're not actually doing anything to resolve the issue. We've seen across the world, we've seen in Australia where banks shut down because of IT failure or an interruption to services. Well, there has to be, I think some customers have to have question themselves as to, will there be a cessation of services with this bank, given that they said we've got a problem and we're doing nothing to resolve it?
Or it may be that actually it works the other way, because if they can't charge negative interest rates on deposits, they may have to find other ways around it, like, I don't know, fees on deposit accounts or something, right? Which is an alternative that is being used in some countries around Europe. So there are alternative strategies that could be actually executed without need to change the fundamental coding inside the banking systems.
So fees could be a way to get around that, but on the surface, I mean, for a CSA we've got a problem and we're not doing anything to fix it. It sort of doesn't give confidence.
And John, the point I want to make is that the testimony that was given, right, was in Hansard, and it was also obviously, there live. But I didn't see any reports in any of the newspapers or any of the other news channels relating to this at the time that those pieces of evidence were being given.
No.
And I find that fascinating and also concerning.
Well, yeah. So I mean, the thing is, like, we deal in conspiracy fact, and I would say that the mainstream media is part of the conspiracy, and they can't tell the public about what's going on and what the banks are trying to do. Now, the other point to make is, I think, so we've heard the testimony from the big four banks, and yet we've heard nothing really from second tier banks, credit unions, building societies, etc. So, I mean, you have a deeper knowledge about how the second and third tier of the financial system works, the banking system. So, if the big four banks are working through this issue with some struggling, how do you think that second and third tier ADIs would be able to handle a negative interest rate environment, and what does that mean for potential customers?
Well, I've done a little bit of digging, and there are some of the second tier players who are fully aware of the issue and are at the moment looking at what they would need to do to make changes, right? But there are others who really haven't started.
Yeah.
And I also know that some of the smaller organisations use shared banking services from a third-party provider.
Mm-hmm.
And in that case, the workload and the list of changes is basically prioritised across multiple organisations.
Right.
So they tend to march slowly, and they tend essentially to march at the speed of the slowest. So the chances are that some of those smaller organisations would probably be in some difficulty if, in fact, negative interest rates on deposit accounts was to come in quite quickly.
So basically what you're saying is, so putting NAB in one bucket, if you're a customer of a second or third tier financial organisation in Australia, you should be concerned about potential IT problems going forward if we headed into a negative interest rate environment.
Well, I mean, it depends, again, how it's handled and how it's done, right? But we know that the IT systems of all of the institutions in Australia are relatively complex, relatively difficult to manage, and as soon as you start to make changes, there are always risks that things may go wrong. And in fact, recently, in the last few weeks and months, we've seen a number of banks' systems fail due to failed upgrades of software. So anytime you make changes to software, there's a risk. And if you are actually trying to make changes in a relatively short time frame to meet, emergency measures, if interest rates were going negative, you've got to be very careful how you do that, because there are clearly risks.
Sure. So Martin, so I thought, just to close this conversation, going to 2020, so I think we're going to be talking quite a bit about negative interest rates, and other forms of unconventional monetary policy going forward, not just in the Australian context, but globally, because of a slowing economy, and the fact that central banks around the world have committed themselves to injecting more monetary stimulus. So this issue is not going away. I think the issue is going to intensify in 2020, and so we're going to talk a lot more about this and get into some of the weeds about what this all means with our viewers next year. But I think that in the immediate context, when people say we're conspiracy theorists, no, the conspiracy is real. And the IMF and others have said that eliminating cash is a prerequisite to making negative interest rates work, and yet we have a bill in front of Parliament saying let's make it illegal to do cash transactions above a certain cash amount, and they say it has nothing to do with this issue. So I think the most pressing problem is to, again, the viewers who are making contact with senators, MPs, between now and the week of the 10th of February, when the vote's likely to come up, they need to be pressing this point home, because the conspiracy is real. the testimony of the big four banks is on Hansard. We've just gone through what they've said, and negative interest rates in one form or another. Even though it's quite extraordinary, unlikely, it will at some point be reality in Australia.
Yeah, well, everything looks to be lining up. Certainly, we can't assume that it's just over the horizon, never going to be here, right? And as you say, the banks are preparing, or some more than others. So, as you say, something to really bear in mind in the context of the cash ban.
Absolutely.
John, I appreciate your time today.
Thank you.
Martin North, John Adams, in the interest of people. We'll see you next time.